Hey guys, and welcome back to a new trade recap of the Scalper Pro stochastic RSI strategy here today. We're going to be starting with the price action on GBPUSD, then we're going over to Euro US dollar, Australian US dollar, over to one US index, which is going to be the US 30 Dow Jones index, and afterwards we're also going to be checking out how the strategy performed today on gold. I'm going to be keeping a track record for the whole performance over this year. This spreadsheet right here will be released later on this weekend, so make sure to join us on Telegram and Discord to be the first one to know as soon as it is released. Alright, so on GBPUSD, I took one trade today. There was another trading opportunity, but I will go through reasoning why I did not take this trade. Alright guys, let's get started right away. Alright guys, let's get right away started with the price action on British Pound US dollar on a 5-minute chart right here. The first trading opportunity that presented itself today was happening right here at 2 AM New York local time, where we had this massive candle to the upside, a reaction out of an old fair value gap right here from 1 AM New York local time. But this entry, I did not take it because A, it was very early during the session and my stop loss would have been too big for my liking. So I usually like to stay below a 20 pip stop loss, because what it essentially means is by choosing a 25 pip stop loss, it also means that your take profit target needs to be at 50 pips. So we will be looking forward after a move of, hang on, let me measure it, of already 20 pips within one 5-minute candle. We're expecting this trend to continue for another 50 pips to the upside. So if I'm looking for the take profit target, then our take profit target would be all the way up here. I mean, we can compare it. It would be somewhere around yesterday's New York kill zone price action. And yeah, so basically I did not take this trade live on my trading account because the stop loss for my liking was too big. If it would have been an entry somewhere around, let's say here, for a 20 pip stop loss, I would have considered it, but I'm avoiding trades that have a larger stop loss than 20 pips during the London kill zone. It's really important to me. We can add this rule as one of the trading rules right here on the British Pound US dollar. Of course, this stop loss will be different for other assets and other time frames. Alright, so after this trade, if you would have taken it, would have hit your stop loss, you would have lost 1%. It's not the end of the world, because there are going to be more trading opportunities throughout the day. So we continued going further down, and we did not get a continuation entry short here, because the stochastic RSI did not cross above the 50 level. Alright, so we continued going down, and then right here at 3 AM, so look at the similarities. At 2 AM we had a massive fake out pump to the upside within this downtrend. So 1 hour later, so within this 1 hour, we continued further to the downside, and again we had a massive pump to the upside. Another, let me measure it out, another 20 pip 5-minute candle. Oh, I didn't want to get rid of the session pro indicator here. Another 20 pip fake out candle to the upside. This time we consolidated and stayed above the VWAP for another 5 minutes. Then we pulled back, had a beautiful pin bar candle forming here with a large wick to the upside and a very small body here. Also a bullish candle, I think. Therefore I would have to turn off the Scalper Pro indicator. Yeah, a bullish candle. Alright. And this was the reasoning, or was another confirmation for me to take the short right here on this candle. We had a stochastic RSI crossover right here on this 5-minute candle close. And something really important that I have to mention here, I did not choose the most recent swing high right here for a 22 pip stop loss, because again, this would be a too big stop loss for my liking. I could have went with a 20 pip stop loss, but then I'm asking myself, where's the point? If price is actually working its way back up to the VWAP and staying somewhere around this area, my idea of this downtrend pullback continuation entry would be invalidated. I don't want to stay within a hour-long consolidation. This is an opening of a new hour. I ideally want to see my take profit target to be hit within the next hour, or maximum the next 2 hours. So that's the goal. So I'm not using my stop loss to say, okay, if price goes above this level, I don't want to be out of this trade. My trading idea would already be invalidated if price is getting above those highs right here. So I decided to go with a 15 pip stop loss right here, placing it on the VWAP. If this bearish candle right here is being engulfed, or if price is working its way back up to here, I might consider taking another entry and taking the loss. I'm accepting that loss. That's really important. I would accept that loss, because what it also means, if I'm using a tighter stop loss of 15 pips, which is actually not such a tight stop loss if you think about it, is that my take profit target is also closer. So if I would have went for a take profit target up here, I think it maybe would have hit your 2-to-1 risk reward ratio. Yeah, it would have hit your 2-to-1 risk reward ratio just then. So basically this trade would have taken 3 hours and 15 minutes, and that's way too long. I don't like to stay in scalping trades for too long. And remember, this strategy is a continuation trend continuation strategy. We see a downtrend, we get a pullback, and we continue into the initial trend direction. That's the whole idea. And I don't want to stay within a trade for 3 hours and 15 minutes during this whole consolidation here down low, where the stochastic RSI is doing weird things while price is just going sideways with very small bodied candles and big wicks all the time. So that's the reasoning. Also, because we had our previous day low sitting right here at this level, here at 18732. So I didn't want my take profit target to be almost, let me measure it out, 20 pips, so we could say 25 pips below our previous day low. I simply didn't want that, so I decided to go with a smaller stop loss of 15 pips, placing my stop loss right here on the VWAP for a very simple 2-to-1 risk reward ratio, only I think 5 or 6 pips below, 10 pips actually, below our previous day low, which is likely to be hit, because most of the times price is going below the previous day's low, and if it likes to reverse out of this liquidity pool, it's trapping traders in short with a movement below or above the previous day high and low for at least another 10 or 15 pips, sometimes 20. That's why this entry right here with a 20 pip take profit target, which would have been hit right here, 20 pips below the previous day low, would have still been valid and hit. But I like to scalp. I don't like to stay in front of the computer for too long, especially when trading a 5-minute time frame. If we move on to the Dow Jones Industrial Average Index, the US 30 5-minute chart, we also see that at 2 a.m. New York local time, we got this pump to the upside right here, which we didn't get triggered into an entry right here on US 30, which is great because our stochastic RSI crossover happened 1, 2, 3, 4, 5 candles ago basically, and that's too long for my liking. We're already very close to the 80 level here on the stochastic RSI. So what do we get? 5, 10, 15 minutes after 2 a.m. So at 2:15, a new 15-minute candle opening. We got a close below the VWAP. The Scalper Pro turned its color from green right here to red at the time of this close, and we also received a stochastic RSI crossover right here. Beautiful entry. You can use the wick as your stop loss, but you can also use the bodies for a tighter stop loss, which also means a tighter take profit target. So it doesn't have to drop too far for your take profit target to be hit. We are not interested in basically profiting on this whole move to the downside. We just want to scalp our bits and pieces, or our pips basically, out of this move to the downside. So our take profit target has been hit right here on this trade, and we continued further to the downside. We had a pullback right here, and on this pullback we did not retest the VWAP right here, but again the stochastic RSI went above the 80 level, crossed over bearish right here, so we entered right here at the close of this candle, with our stop loss at the most recent swing high for a 25 pip stop loss, which is alright on US30, because on US30 prices are a little bit more volatile and move by more pips than, relatively speaking, on the British pound US dollar. So a 25 pip stop loss is fine, even if you went for the candles close basically right here, or the opening. Your stop loss still wouldn't have been triggered depending on your spread. Of course, you also have to add something on top of it for the spread right here. So here 25 pip stop loss, I like to round up the numbers. You would have been safe, hit a beautiful 2-to-1 risk to reward ratio right here. Boom, for another winning trade. Of course, during this consolidation sideways right here, during this pullback, this wasn't your only entry opportunity. If you didn't like the setup, there was another entry opportunity, I'd say, right here on this bearish engulfing, where we pulled back again to the top of our consolidation range. We engulfed this candle right here, this bullish candle, bearish. Our stop loss would have been tighter. We could have placed our stop loss maybe right here at this swing high for a 20-point stop loss. Our stochastic RSI now, from almost crossing over bullish right here above the 50 level, crossed over bearish again, or basically it did not cross over completely, so we could say it's just a continuation or a confirmation that likes to continue further to the downside for a 2-to-1 risk reward ratio. So if you would have taken your entry here or here, pretty much doesn't make a difference, only that your stop loss might have been hit if you didn't choose those wicks high as your stop loss. And I mean, there's not much of a difference between this highest opening or closing price to those wicks, so you could have actually went for the wicks. Alright, that's the price action on US30. Let's continue with the next. Alright, let's switch some things up today. I'm also keeping track of the performance of the Scalper Pro stochastic RSI strategy on gold US dollar on a 5-minute chart as well. And we started out this London kill zone as well with a candle right here, and we had a bullish crossover below 50, but this candle was a down close candle, so I did not consider taking this entry right here. The next candle also was a bearish down close candle. It's just colored in green because the candle coloring is being done by the Scalper Pro. So right now the stochastic RSI crossed over bearish then at the close of this candle. We continued pulling back further to the VWAP, and now the stochastic RSI was in the oversold territory. We crossed over bullish. We had a close above or on the VWAP basically. I used a stop loss of 20 pips. I didn't take the trade on gold today, but I would have chosen a stop loss of 12.4 pips, maybe right here at the low of this candle, because there's not really a most recent swing high or swing low that you could choose for your stop loss placement. And this trade got stopped out right here at 2:40 AM with this wick to the downside. But of course, it would have still been valid to re-enter on this trend, especially after this fake out wick to the downside, because the stochastic RSI is still on its way back into the overbought territory. This trade would have hit your break-even point because it hit a 1 to 1.5 risk to reward ratio, so you would have moved your stop loss to break-even, and your stop loss would have been triggered at break-even right here at 325, which also was a very nice short entry because we closed below the VWAP. We just had a very recent stochastic RSI crossover 1 candle ago, so that's perfect. And now the question is, okay, where are you going to place your stop loss? Are you going to place your stop loss all the way up here? To be honest, I wouldn't like doing that, because why would I be interested in a continuation trend to the downside, placing my stop loss all the way up here, allowing price to move around here in drawdown? I'm not interested in that. I want to see a continuation trend to the downside. I don't want to allow price to come all the way back up here above those wicks, or just to those wicks and adding some more let's say spread limit on top of this stop loss here already. You can go for a 1-bar stop right here, which is already 15 pips, or you can go for a fixed 20 pip stop loss right here. Hang on, let me drag it up a little bit higher. 20 pip stop loss right here, and your 2-to-1 risk to reward ratio would have been hit. Aim low for your take profit targets, and be aware that by choosing very big stop losses, adding up more spread and stuff like that on top of it, look, now we're only at a 1.3 risk to reward ratio. Go for tight stop losses, look for round numbers like 20, 15, if they're matching up. There's no need for you allowing price to come all this way back up here for the single trade with your take profit target of 2-to-1 risk reward somewhere down here. You're aiming for too much. That's what I have to say about stop loss placement using this strategy and the stop loss placement in general. Some people allow price to retrace by too much instead of, for example, considering taking a new entry after your stop loss has been hit.